flows. Foreign investors remain net sellers for a third straight day. In fact, they sold shares worth 2,800 crore rupees in the cash market. But on that note, let me bring on board our guest for today. Joining me is Nilesh Jain, Head Research Derivatives and Technical at Centrum Broking. Nilesh, great to have you on the show. We've been in a range between 24,500 to 25,000. Yesterday, we ended near the day's low. Do you see the possibility of that range being taken out today, especially on the downside, 24,500? Can that get violated today? And if yes, what would be the support level that you'll be watching out for next?
Hi, morning Nanita, morning to everyone. So yesterday we did see a crack where Nifty breaks below 24,600 mark, and the important supports are very much in place at 24,500. If you look at the derivative data of the weekly FN expiring tomorrow, the data suggests that 24,500 on the put side has meaningful OI concentration, and if Nifty breaks below the same decisively, then the next target would be 24,000. Because 24,000 is the 200-day moving average as well as 50-day moving average. Both are exactly placed at the same levels. But overall, looking at the yesterday's move, I think there could be possibility of a dead cat bounce or a small pullback before we see another leg on the lower side. So Nifty is trading in a broader range of 24,000 to 25,000. There's a thousand point trading range, but narrow range from intraday point of view could be 24,450 to 24,600. That could be the range. And since we have RBI monetary policy outcome tomorrow, so we are expecting market to remain volatile, specifically Bank Nifty, where we have seen a new record high yesterday. And the structure of the Bank Nifty looks more promising compared to the Nifty index. We are expecting Bank Nifty to inch towards 56,500 to 57,000 in the June series. I would buy the dip in the Bank Nifty if at all it falls in the range of 55,200 to 55,300. That can be a good entry point, keeping a stop loss below 55,000. And the upside target would be, immediate target would be 56,000 to 56,500.
Okay, that's the range to watch out for on both the Nifty and the Nifty Bank indices. But in the pre-open now, we have reversed course. In fact, the Nifty is hinting at a slight uptick. Let's see what really happens. We have 5 minutes to go for the markets to open. But since we're talking about banks, HDFC Bank will be in focus. SEBI has approved, its arm HDB Financial's 12,500 crore rupee IPO, and this IPO will comprise 2,500 crore worth of fresh issue and 10,000 crore rupee OFS by the parent HDFC Bank. Now, HDFC Bank owns almost 95% stake in HDB Financial, and HDB Financial as an upper layer NBFC is required to list by September 2025 as per RBI directive. Looking at the charts of HDFC Bank, has been sideways, so to say, but it has tried to make some bit of an up move from the second week of May. What are the levels to watch out for here?
In last couple of weeks, we have seen a bit of a consolidation. The counter is constantly facing resistance near about 1950. So if it breaks above 1950, it will be considered as a triangle formation breakout, and then the target would be somewhere around 2000 as well on the upside. So structure is looking positive, but the idea is to buy on dips, accumulate this particular stock from a positional perspective. And from a trading point of view, as mentioned, I would rather wait for a breakout above 1950, and then momentum can be seen towards 1980 to 2000. Stop loss for all the long positions should be placed below 1900. So structure wise, HDFC Bank, Axis Bank, and also ICICI Bank, all these three banks are looking strong on the chart.
Okay, all the three private sector banks looking good on the charts. But off late we've seen a flurry of block deals on Dalal Street. Today as well, there will be as many as 4 block deals, starting with Tata Technologies. Sources suggest that TPG Rise will be selling over 2% stake via block deal. The total block size is valued at somewhere around 630 crore rupees or thereabouts. Floor price for block deal at 744.5 rupees per share, which is at a 3% discount to yesterday's close price. Any thoughts on where Tata Tech is heading on the charts? Any patterns that you've been spotting, and how should one trade into this counter, especially in light of this block deal?
Nita, we did see a breakout in this particular stock from the levels of 730. So that was a breakout from its double top pattern on the daily time frame chart. Now it seems like it may revisit those breakout levels once again. So as of now, the immediate level to watch out for would be 730 to 740, 745. Those are the important support zone, and I think that can be a good entry point if at all it falls in that particular range. The immediate trend looks slightly on the negative side after yesterday's bearish candle that we have seen on a daily time frame chart. So fresh long position can be initiated only if it takes out 800 levels on the upside, and accumulation can be seen if at all it falls near about 730 to 740.
Okay, that's about Tata Tech, but let's talk about Indegene as well. There's going to be a block deal in the counter as well. Sources say that CA Dawn will be selling somewhere around 10% stake via block deal valued at approximately 1420 crore rupees. Floor price is at 580 rupees per share at a 6.5% discount to the current price. In the pre-open, of course, we are seeing the stock down 3.5%. In the last 1 month, it has shown some bit of traction, up almost 8%. At almost 600 levels, what should one do with the stock? Because the highs are in excess of 700 rupees. Do you see more room for an upside?
Absolutely. So if you see the counter got listed last year, so last 1 year, if you see the overall structure, the counter ran up to the levels of 725, 728 and formed a triple top kind of pattern on the upside. So overall, since those levels were not been able to take off this particular counter, we have seen a broader consolidation in the range of 500 to 725. That's the broader range. So looking at the recent up move in this particular stock from the lows, the counter has started moving in a higher top and higher bottom formation. So any dip from here can be used as a buying opportunity, keeping a stop loss below 580. 580 is the recent swing low this particular counter has formed. So ideally that should be the stop loss for the long position. And we can expect a gradual up move to continue towards 660 to 680 levels on the upside.
Okay, watch out for levels of 660 to 680 or thereabouts on the upside when it comes to Indegene. Just about 15 odd seconds to go for the markets to open. We are looking at a flattish open but with a positive bias. The GIFT Nifty, mind you, was up somewhere around 40 points or thereabouts. Global cues are looking fairly strong. US markets clocked in back-to-back gains yesterday on the S&P 500, and technology shares will be in focus after a good rally that we saw on stocks like Nvidia. It is a flattish start as was being expected. A 50-point uptick for our market as well. We are around that 24,600 mark. So managing to defend that 24,500 level today as well. So that's something that one should take heart from. The broader market outperformance that kind of fizzled out yesterday. Today we are seeing traction coming back into the mid cap end of the market. It is moving in tandem with the benchmarks, 0.2% higher for the Nifty mid cap index. The Bank Nifty has also opened up with a green tick. Yesterday, mind you, it hit a fresh high of 56,100 or thereabouts, 160 or thereabouts, and came under a bout of profit taking. Today, it is trying to recover some lost ground. It's at 55,700 as we speak. It's a 100-point up move. Rate sensitive basket is in focus ahead of the RBI policy decision on Friday. The 3-day meeting, mind you, has kick-started today. So all these rate sensitives are in focus, especially the realty basket. It has been on an upswing over the last 2 sessions. Yesterday as well, in a weak market, we saw realty pack holding strong, and that was the top sectoral gainer. But today, let's see which of the sectors is taking the lead. As I mentioned, Nifty Bank in the green, but let's see what the other rate sensitives are doing. Autos, almost a 0.4% kind of a gain. You're seeing realty pack up 0.2%, so extending gains for a third straight session. But all the sectors are trading in the green as we speak. Even the IT pack, it's extremely flat, but it's trading with a mildly positive bias. But since we saw a rally in technology shares in the US market, technology pack was anyway supposed to be in focus today. So yes, all in all, a positive start. In terms of individual movers then, let's see which are the stocks that are gaining. Shriram Finance, that was a gainer yesterday as well, and today it's a top Nifty gainer. Bharti Airtel, Eternal, Dr. Reddy's, Tech Mahindra, Wipro, Hero MotoCorp, Bajaj Finserv. These are some of the other movers. Bajaj Finserv, mind you, was a laggard yesterday. It has staged some bit of a comeback. TCS is the top laggard on the index. Ultratech Cement, JSW Steel, ICICI Bank, Titan, Coal India, Bharat Electronics, these are some of the stocks that are witnessing some bit of selling pressure. But mind you, metal stocks will be in focus because higher tariffs, 50% tariffs on steel and aluminium imports from the US by the US in fact, comes into effect from today, 4th of June. So yes, metal universe will be in focus as well. But looking at the open, Nilesh, what would you do with some of these metal names? Yesterday they were under pressure, and today, of course, the higher tariffs have kicked in. So, the likes of Tata Steel, Hindalco, how should you trade into these counters given the volatility?
Well, Nita, this particular space has been in limelight amid tariff constraint that we are witnessing. A lot of volatility can be seen in this particular space. So first of all, it's an avoid from our side. Looking at the overall Nifty metal index structure from the highs, we are witnessing some bit of selling pressure. Today also, it is making an attempt to turn positive, but I think a lot of consolidation can be seen in this particular space. So nothing concrete as of now coming in this particular space, but if at all we see any meaningful correction in the stocks like JSW Steel, JSPL, and also Steel Authority and Nalco, these are the couple of stocks which are on our radar, but not at current level. We are expecting some profit taking to continue from a short term perspective, but as of now, we are avoiding metals.
Okay, metals is an avoid. But let's take stock of the auto component makers as well, especially the likes of Bharat Forge and RK Forgings. Given the fact that, May Class 8 truck order data has come out, and North America Class 8 truck orders were up 40% on a month-on-month basis, although they're down 47% on a year-on-year basis. Of course, Class 8 truck orders have gained momentum on a month-on-month basis for the first time in 6 months. That's good news for the likes of Bharat Forge and RK Forgings. Bharat Forge at the current juncture is extremely flat, not really reacting to this bit of news flow. But in the last 1 month, the stock has done well to clock in a rally of 14% or thereabouts. Are you looking at a trade here in Bharat Forge, or would you look at it more as a positional play?
See, it's a positional trade, of course, given the kind of rebound that we have seen in this particular stock. After hitting lows below 950, the counter has started moving in a high top and high bottom formation. So it is on the verge of a major breakout. The breakout level is placed at 1290. So a breakout above that will open further upside towards 1350 to 1400. But more sort of a gradual up move is something that we are expecting. So it's a positional buy. Buy with a stop loss below 1220. 1220 is the important support for this particular stock, and a gradual up move may take this counter towards 1350 to 1400.
Okay, gradual up move to 1350 to 1400 levels. But let's talk about Aditya Birla Fashion as well. The block deal in this counter that was supposed to happen has taken place. 6.2% equity has changed hands, worth 617 crore rupees, and the trade took place at 81 rupees per share. The stock is down 8% as we speak taking the last 5-day returns to minus 9%. It's at 80 rupees or so. Any thoughts on where it could take support?
See, structure-wise, ABFRL is looking slightly on a weaker side. We have seen a lot of consolidation in this particular stock in the past. Almost from past 1.5 year, the counter is stuck in a very tight range and constantly facing resistance at the high level. So as of now, looks like it may test the levels of 77 to 76 on the lower side. 75 to 76 is an important support zone. I think from those levels, we may see a rebound coming in. But as of now, it's an avoid taking any sort of contra bet at present at current market price. We may see further downtick to continue.
Okay, chart structure looking weak. It could see more downside here on Aditya Birla Fashion. That's the call from Nilesh. Nilesh, let's shift focus to our viewer queries then. One pocket that was a high flyer yesterday was the entire fertilizer pack. We saw stocks rallying anywhere between 5 to 18%. There's a query that has come in on RCF after yesterday's move. what would you do with the stock? Would you look at booking profits?
Well, if somebody has already bought the fertilizer stock and riding the momentum, I think it's a good time to take out profit. If bought it from a purely from a trading perspective, because after yesterday's spurt, there could be possibility of some profit taking at the high levels. From a positional point of view, I think if somebody is looking to make an investment from let's say 4 to 6 months, I think these are the good bets to stay put. RCF, FACT, NFL, all these stocks are looking positive. But purely from a positional perspective, RCF has a potential to test 175 to 185, and stop loss should be placed below 152. So that should be the stop loss if somebody wants to stay put for next 4 to 6 months. But if bought it purely from a trading perspective, I think good time to book profit in the range of 164 to 165.
Okay, book profit, that's the call, around 164, 165. Hope that answers your query, Naveen. We have a couple of queries on Tata Tech and RK Forgings. You've already taken them up. You could just go back in the feed and check Nilesh's answer. But let's take a query on IOC. Nilesh Sabkale has written in, wants to know your thoughts on how the stock of IOC is placed. Crude prices have been fairly volatile. The Brent is steadying around $65 or so. But if you look at stocks of IOC or OMCs, so to say, they've flattened out, and in the last 1 month they've given negative returns. So at 140, is IOC a good candidate for a fresh entry? And if somebody is already holding the stock, what should they do with it?
Well, if you look at OMC space as a whole, we are witnessing more sort of a consolidation in this particular space, and IOC being one of the underperformer because we have seen a good momentum in HPCL, BPCL, but IOC has been a laggard. As of now, it is constantly facing resistance at its 200-day moving average as well as 21-day moving average. Both are placed exactly at 144 levels. So a breakout above 144 is needed for this particular counter to turn on a positive side, and then we may see a levels of 150 to 160 as well. But as of now, purely from a positional perspective, these are good levels to accumulate these stocks because we have seen in the past the counter has taken support in the zone of 130 to 135. So that's a good support zone for this particular stock. Not from a trading perspective, if bought it, then stay put, give some time. The stock has a very good dividend yield as well. From a positional perspective, a gradual up move can once again come, and 150 to 155 kind of levels can be seen.
Okay, that's the view on IOC. There's another person who wanted to know about IOC. That's Geetu Sandesh. Geetu, hope this addresses your query in some way. But let's take up a query then on Vedanta. I know we discussed metal pack, and your call is avoid. But if somebody is holding on to something like a Vedanta at an average price of 444.5, what should they do? Jaskaran Bajwa has a query on this particular stock, and he is holding the stock as well, making some bit of a loss. What should he do with his holding?
444 is not too far from current market price. There could be possibility of stock to witness some bit of a pullback towards those levels. So from a trading perspective, I think one can stay put if already bought, keep a stop loss below 425. 425 is the recent swing low that this particular counter has formed on Monday. So now stay put. We may see because see metals have been fairly volatile. In this volatility, you are witnessing both sides of move. As of now, today you see the Nifty Metal Index is making an attempt to witness a bit of a pullback. So in this pullback, the chances are very high that Vedanta may test the levels of 440 to 445. Those are the levels where one should exit.
Okay, that's the view on Vedanta. Hope that answers your query, and I hope you've taken note of the levels where you should be exiting. On that note, let's take up our next query. This one's coming in from Anunay Irinki. He has a query on PG Electroplast. He bought at 844 rupees a share. He wants to know whether he should average or exit and add a Cairn stack instead. What would your advice be?
See, first of all, PG Electroplast, this counter was in a secular uptrend, but since past couple of months, we have seen more sort of a selling pressure that has come in at the high levels near about 1000 to 1020 that has acted as a very strong resistance zone. But now, since we have already witnessed a gradual decline, after this decline, the counter has reached to its multi-month support zone and also 200-day exponential moving average, which also places 730 levels. So 730 should be the stop loss for the long position. Wait for some pullback. Pullback towards 800, 850 can be used as an exit opportunity. Now coming to gains, see both the stocks have a similar setup, and in both the stocks we have witnessed consolidation in past 4 to 5 months now. So there's no point shifting to gains as of now. Stay put with your existing long position in the PG Electroplast. I think there should be possibility of a pullback.
Hmm. Okay, that's the view. I hope that answers your query, Anunay. Let's then shift focus to a query on Patel Engineering. This query is coming in from Vijay. He wants to know the future or the prospects of the stock, given the fact that he's pointed out that the company is winning new orders, but the stock price is really not moving up. Chartically, what is the pattern? The stock has been fairly sideways, and monthly basis it has in fact given a negative return. But any patterns that you can identify on the charts of Patel, and what should one do?
In Patel Engineering, if you just pull up last 1.5 year chart, you can see the counter is moving sideways to negative, constantly trading in a falling channel. So structure-wise, positionally, the structure looks weak, and we may see further downtick to continue towards the levels of maybe 39, 35 kind of levels can be seen on the lower side. So structure is not looking promising. If at all you see any pullback towards 45, 50, use those pullback to exit. Purely from a trading perspective, I think there could be possibility of a further downtick to continue. And if somebody wants to stay put, then keep a stick stop loss below 36, because if it breaks below 36, then the target would be somewhere around 32 to 30.
Okay, that's the view on Patel Engineering. Hope you've taken note of the levels that Nilesh has just pointed out. But I think one last query. Then let me squeeze in quickly. Hemant Singh, the query has just come in. He wants to know your thoughts on Asian Paints, Nilesh. He purchased it at 2,400 rupees, and the current level he's pointing out is 2,250. So he is making some bit of a profit. I beg your pardon, he's making a loss here. Should he keep holding it, or how should he navigate?
See, from a short-term perspective, apart from OMC space, paint stocks are also witnessing consolidation as of now. So, from a trading perspective, there is still some more room left on the on the lower side. The stock may test the levels of 22,200 as well. So, if the view is to hold for 4 to 6 months, then stay put. Keep a trailing stop loss at 2175. The counter may turn positive gradually, and then we might see the levels of 2400 to 2500, but not from a trading short-term perspective, because short-term structure looks weak, and positionally the stock has a potential to test 2400 to 2500 maybe in next 4 to 6 months.
Okay, that's the view on Asian Paints. But with that, we've come to the end of the query segment. Before I let you go, Nilesh, your thoughts, your stock recommendations, in fact, for our viewers with a 1 to 2 day perspective, or for the next couple of weeks.
As you have pointed out at the beginning of the show, that rate sensitive stocks should be in focus, and that's the space where we are witnessing a bit of attraction in last couple of trading session. Banking, realty space, NBFC space. So this space where we have seen a good momentum, I think this momentum should continue. So within that space, within realty pack, prestige state is something looking attractive, although we have seen a good momentum. But if at all we see any dip towards 1570, 1560, that can be used as a buying opportunity. Keep a stop loss below 1540. The stock has a potential to test 1640 to 1650 on the upside. Apart from that, we have seen good momentum in defense pack. So defense is another sector, another basket that is looking attractive, and we are expecting this momentum to continue further. So within that space, counters like HAL, Cochin Shipyard, and also Majgaon Dock. All these three stocks are looking positive. Specifically, Cochin Shipyard looking strong for 2180 to 2200 levels on the upside with a stop loss below 2100. Cochin Shipyard can be looked at. Apart from that, lastly, Paytm is another stock where we have seen a good breakout on Monday, and in our last two sessions, we are witnessing a follow-up more on the upside. So, momentum can be seen towards 955 to 965 with a stop loss below 932. Paytm can also be bought.
Okay, those were all the recommendations coming in from Nilesh. With that, Nilesh, would like to thank you for taking out time and joining in as always. Always a pleasure chatting with you, and I look forward to interacting with you again next week sometime.
Thank you, Nanta.